Hi, welcome back, entrepreneurs. I'm going to give you a quick overview of the best way to tackle this week's homework assignment. It's going to be important for your final project as well, for that pitch deck. So the numbers that you generate this week, you will need to complete that final project. What we're going to focus on is both sales forecasting and a longer term pro forma income statement. What we're trying to figure out here, first, what are the reasonable sales and expense projections over time? We're going to chunk it down so that we go month by month over a 3-year period of time. Once we learn reasonable sales and expense projections, we've got a tool that will automatically calculate for us the projected net income over that 3-year period of time. So these are the two main things that we're doing this week. To do this, we have to get an accurate forecast of our sales or the revenue. Remember that formula for revenue is the selling price times the quantity of the units that are sold. Whether we're selling a product or a service, we use the same formula to determine revenue. So the first thing we have to do is estimate a selling price for our products, and we've been playing around with some selling prices already, so hopefully you have something in mind. Then you're going to estimate the number of customers or purchases. You might have one customer that makes multiple purchases throughout a given month. Then finally, we take that selling price and we multiply it by the number of purchases. Now we have to go through this process for each product category. Some of you might be selling just one thing, either one service or one item, one widget. But many of you could have businesses that have multiple product categories. So let's look at an example of what that might look like. This is an example of the spreadsheet that you have access to in Blackboard. So let's continue with our bakery example. Maybe we'll add in a coffee shop just to illustrate the point of the additional product categories. And I'm just realizing that my screen doesn't cover everything I want to show you on the slide. Here we go. Okay, so in our bakery or coffee shop example, we could have multiple product categories. You might sell cakes, cupcakes, scones, then hot drinks and cold drinks. The list might go on as well. This spreadsheet is adjustable. Your tool is adjustable. So we're going to make some estimates. We're going to pretend that we'll sell, or guess that we'll sell 10 cakes with an average selling price of $40. The spreadsheet will automatically calculate the total for you. You're responsible for inputting the quantity sold and the average selling price. And you also need to name your product categories. I think I have them in here now as A, B, C, D, etc. So tell me what the product category is, the quantity sold, and the average selling price. Now please note that this may fluctuate seasonally and should grow over time. So as you are doing this for a month, keep in mind in this example, maybe month 1 is January, we're going to sell a lot of hot drinks, but not as many cold drinks. In July, it might be just the reverse, fewer hot drinks, more cold drinks. So keep in mind you may have fluctuations based on the seasons, but overall, we want to see some growth over time, over a year's period for sure. And then from year 1 to year 2, there should be growth. And from year 2 to year 3, there should be growth as well. So we're going to do sales estimates by the month. And then that translates into our pro forma income statement. You've already learned that the income statement is made up of revenue minus expenses. And that gives us our net income or sometimes our net loss. So we've just calculated revenues. And you know that expenses come in 2 categories. The first is cost of goods sold, and the second is operating expenses. So good news, you did find that industry average cost of goods sold last week. That should have been in a percentage terms. And you also got to start at estimating some of your operating expenses. We're going to look at them in a little bit more detail this week. So here's that pro forma income statement, and I just want to show you the important information you have to enter, and then we'll go look at it together. So make sure that you enter in that cost of goods sold. That is the number that you determined last week. The cell is already formatted as a percentage in the spreadsheet. So if your cost of goods sold, for example, was 25%, just put in 25. You don't need to put in 0.25, you don't need to put in 25 and then a percent symbol, just put in 25. It's already formatted as a percent. Then you're going to take your net sales that you determined on the first tab. So I've given you 12 months of that sales worksheet. And I expect each one to be a little bit different, whether it fluctuates seasonally or whether it just grows over time. You enter in row 5 all of the sales information that you got from your previous tab, those sales calculations. It will automatically calculate the cost of goods sold for you and provide a gross income. Then, and this is going to take the most work and effort, you need to look through all of the operating expenses and do some amount of research to determine what's a realistic operating expense for your business. You may not have every single one of these categories, but you certainly will have some, if not most, of these categories. So I do want to see a lot of numbers in most of the categories for the spreadsheet. That's it for the slides. So let's just go over to the spreadsheet and take a look at that real quickly together. Let me get into the right week. So you're going to open up the spreadsheet. And you'll see this first tab, the sales estimates. And remember I told you I'm giving you 12 months. You can use those 12 months and then calculate the next 2 years based on a certain percentage growth. Or you can just copy and paste and go through each individual month over a 3-year time period, whatever you think is going to be best for you. So for example, sales estimates for month 1. Let's say we're a salon, and this might be, oops, I'm going to enable editing and enable content. Okay, so the first product category might be cuts. And the next might be color. And the next might be nails. You'll go in and do all of your product categories and estimate the quantity sold, whatever it might be for you. I'm just going to plunk in some numbers so that we have something to work with. And then the average selling price. So you'll see as we put in numbers here, the totals for that product category and for the monthly sales total populates by itself. Notice I didn't use the last 2 product categories. That's fine. You don't need to use them if you don't have them. You can also add more if you'd like. Just be mindful of the formulas in Excel and let me know if I can help you with that. So now I've gotten month 1 for sales estimates, and I will take this number, 4,450, and enter that into my month 1 for January. And you can adjust these months if you're not going to open in January. Let's say you open in April. Feel free to adjust the months. So what is my cost of goods sold? This one's going to be a little bit different because it is in fact a service, but there are certainly some costs of goods sold associated with performing these services, like the hair colors, like the shampoos and conditioners. So you found already your cost of goods sold as a percentage. I'm going to say it's probably fairly low. In the beauty industry, I might just put 8%. But that's a number that you're going to research. So again, you're seeing these numbers populate. This is just 1 month. This is just a quick example to show you how the spreadsheet works. So we have 1 month of income. In that month, I'm going to have certainly some advertising. I'm definitely going to spend some money advertising my brand new business, maybe $500. Probably won't have any bad debt expenses. Let me just skim through and just add some things. We need some printer, paper, some ink. So I'm just going to add, I'm a sole proprietor. I'm not going to worry about payroll now. And, oh, I've got rent. So just to add in a few different numbers here so you can see. The important information is down here at the bottom. I have total operating expenses and an operating income in this first month. Because I only did 1 month, I don't have any other information. So that translates into my total operating income or loss before taxes for the year. Let's just say I had a very expensive conference that I went to in that first year. If our expenses exceed the income, you're going to see that your operating income or loss has a parenthesis around it. What that means is that you have a loss. The parenthesis means a negative number. So please be aware of that. It's pretty common to have negative numbers at the start of a business, so don't panic. It doesn't mean you've done anything wrong. But what we do want to see is that over time, over that 3-year period for sure, we start to have profitability and a positive number for our net income and loss. So this is the essence of what you're doing this week. If you have any questions while you're working through it, let me know. But I do want to see you doing actual research for these operating expenses instead of just plunking in some random numbers. Reach out if I can help you.